All right, getting a few things sorted out before we start with this stream. Do let me know if you can hear me and see me perfectly on your side of the world. What an interesting few days it's been. I'm gonna wait a few minutes before we jump into what we're going to be discussing today. About the cryptocurrency market, the dump we experienced, what that means for the whole cryptocurrency market. But I will be sharing with you the complete opinion about what I think about this dump, maybe some ideas and strategies that you can use to better handle such dumps, as well as a long-term outlook on the ETH price. We'll also be looking at the BTC price, some interesting news as well as fun things. And at the end, I've got a 10x DeFi gem that I've been following that I think is pretty promising. Hi, Hedgeback Pro. Happy to hear you here. Raf being I fell asleep during the dump. Well, I mean, you can see that as a positive way in the sense that you didn't panic. But yeah, I can imagine your frustration since you probably wanted to buy the dip. Hi, Sean Burker. Nice to have you back on the channel. Yeah, it's going to be very exciting, the stuff I've found that I'd like to share with you. I've also been having a lot of conversations with our friends that haven't maybe experienced such dumps, and I understand the type of feelings that they will be having when they see maybe 10, 20, 30% of their portfolio evaporate. And I also understand that it can be pretty scary for those people that have entered into the market in the last 3 weeks, 4 weeks after the price increased that much. Hi Liz from Houston, happy to have you here on the channel. Hope everyone is safe and has a great start into the weekend. Not sure what time it is where you're at, but here it's 9 o'clock. GMT +1. I'm streaming live from Basel, Switzerland. So if you haven't already been to Switzerland, I highly recommend that you come to Switzerland, not only for the chocolate, the cheese, and the pretty good weather. I mean, especially if you like snow and mountains, but we've also got one of the friendliest countries in terms of cryptocurrency. I mean, if you can imagine not having short-term capital gains tax, that is definitely a dream, and I realized that I've got it pretty good here. So hopefully wherever you are, you're doing well and staying safe. All right, so in today's video, I'll be talking a bit about profit-taking emotions, as that's a very, very important topic, especially after the 20-30% dump that we just experienced. And I'll also be sharing you my exact strategy on how I typically take profit out of the market and the psychology attached to it, because this is extremely important. I believe most people, they tend to buy and sell based on their emotions, and I'm striving away from that because it's one of the worst things to do. It's terrible for your portfolio as an investment strategy. Since relying on your emotions make you take drastic decisions. So we'll be talking a lot about that, how I'm planning on exiting from the market, and what kind of strategy I highly recommend you to take. I'll also be looking at what the next few weeks is going to look like for the DeFi space, for ETH, for BTC, and yeah, we won't be looking at traditional markets today, but mostly about crypto. And also hopefully will give you a little bit of light on how I see the whole situation with the FUD that's been going around with the double spend, allegations on the Bitcoin blockchain, and the interesting aspect on this correlation when the market seems to be going pretty well, and then you've got these FUD allegations. If that has to do with the drop or not, I'm going to be talking a bit about that, and then also covering some news. And at the end, I've got a 10x DeFi gem that I've stumbled upon a few Actually, I stumbled upon it, I think 1 or 2 weeks ago. I posted about it on Twitter. So if you're not already following me on Twitter, it's at your DeFi guide. You find the link in the description. I share sometimes more advanced strategies, more advanced information. If you're already familiar with many dApps, I'm sure you'll find a lot of value there. What I've also got is I'm going to be starting a new newsletter. It hasn't started yet, but I'll be starting when I've got 100 people. You find the link down below if you're interested. And I'll be mostly sharing some information that I find right away that you will hopefully be able to use to increase your investments. Not investment advice, but more like suggestions on how you should think about the whole market, and yeah, helping you basically make better decisions, not telling you what to do. So if you're interested, you'll find the link down below, and hopefully we'll be starting this week, next week, depending on how many people sign up until then. And yeah, that's it. So yeah, Twitter and newsletter, that's out the way. So I'm pretty sure when you actually saw your portfolio 1 or 2 days ago, you probably had the same reaction to this guy here. I quickly play that. I think it's a really fun. He's like, thinks his dog's dead, but the reaction is basically astounding because yeah, he thought his dog was asleep or actually passed away, and luckily it didn't happen. So basically that's the exact same reaction that I'm probably sure a lot of holders had with the portfolio over the last 2 days, and I really feel sorry for those that sold at the bottom of this correction, as it typically happens in a market. You're always going to have people that sell at the top and people that sell at the bottom, and it's especially the new people that have entered into the market that are not aware of the extreme nature and volatility of the cryptocurrency space. So here I've got a pretty interesting chart, and I think this is very important because this will highlight how on where the money will flow in the next few weeks. So we are definitely in an altcoin season. What that means is BTC is going to be trending sideways, probably in the range between 30,000 and 35, 37,000. So you're going to have sideways like trading, which is pretty good for altcoins. So you're going to have DeFi is going to be pumping like crazy. Then you're also going to have ETH pumping like crazy, and then we're going back to the BTC season. So at the moment, you're going to have a lot of gains in your altcoin positions. You probably already noticed that if you've got some gains already. Quite a lot of DeFi coins have performed really well. If you look at the DeFi Pulse Index, which is an ERC20 token that tracks, like I believe it's the top 10 DeFi coins, that has doubled or tripled in value in the last 2 weeks. So BTC is not going to be doing too much, in my opinion, for the next month. ETH is hopefully going to be increasing in value. My price prediction is still $2,000 at the end of January. I do realize we are a bit tight on time to reach that price prediction, but nevertheless, the other metric I'm really looking at is the ETH BTC ratio, and I hope that actually reaches 0.05 in the next 2 weeks. And that's pretty good, because if ETH gains in value to BTC, then it's better to hold ETH. And at some point, I will be moving a portion of my ETH that I actually sold at 40K back into BTC when the ratio of ETH BTC is pretty high. So I think before we actually start with the charts, I think it's really important that if you're completely new to cryptocurrency, don't even try and think about trading with leverage, because you get wrecked really fast. I mean, some people, they start with the cryptocurrency space and they start trading 10x, 20x, 50x, and even 125x, as with an example that I want to share with you. And yeah, you get wrecked really, really fast. So for anyone new, I mean, there's many people coming into the space because they see the numbers going up and they're happy about that, and they actually also want to participate in their portfolio going up. And yeah, they start buying when there's massive green candles, and they don't really expect that with massive green candles, you're also going to have massive red candles. So when's the best time to buy Ethereum? Your opinion? Basically, when you've got red candles or right after the dump is probably a good time to dollar cost average. Like I always like to say, don't try and time the market. Don't try and wait for a drop. But if there is a drop, I would recommend buying. It's especially better to buy then than to buy at the top. That's basically my recommendation for when you should find some entries into ETH. Brujin, so just hodl till the end of time. No, I wouldn't recommend that. I'll come to my exit strategy in just a bit on what I plan on doing. And it's quite interesting because I haven't really seen that many people talk about it on YouTube videos on how they actually exit. I've seen a few strategies, but they're mostly based on TA, and this is definitely not a TA type of exit strategy. You don't really need to understand how the markets work. It's really, really simple. Anyone can use it, and it removes all the emotions. But I'll come to that in just a bit. So here there's this new crypto investor. I'm completely new here. I've been trading crypto, mainly ETH, of course, for just 1 week. It's been quite a ride. And here are 2 things I learned the hard way so far. FOMO is real, and it's a bitch. I remember that. So yeah, when you see the massive green candles, one coin is pumping like 10x, 20x, and your coin is only pumping up 5x. It's really easy to look the other side and see that coin is profiting more, and then you try and jump on that bandwagon. And in the end, when you've swapped sides, your coin actually starts pumping. So this is real thing that happens to many people. I mean, it's also happened to me that at some point a coin hasn't been performing that much, and I decided, all right, I'm impatient. I'll just go back into either ETH or BTC. And as soon as I sell that other altcoin, it just pumps like 20-50%. It just happened to me recently with one coin where it just went up 50%. So yeah, do not FOMO. Try and find coins that you like, not after that they become quite popular because they pumped, but because you like the tech behind it, because you like the vision of the project, and so on. So greed is really terrible. So here he made small gains, sold ETH, kept going up, regretted selling. I got greedy and thought I could make more, bought back ETH at all-time high, thinking we'll continue going up, and that didn't happen. I lost all my small gains and lost 20% of my original capital in 2 days so far. So yeah, that's definitely terrible. Trying and chase and time the market, trying to actually find the top, sell, and try and buy back is one of the easiest ways to get wrecked. So here, of course, SolDZ, Red de Brun, hodling is a lot better than that. Because yeah, if you try and time the market with your complete position, you're just going to get wrecked. So let's have a look at ETH USD, what its current situation is, and what the next few days is going to look like. So actually, I'm pretty happy with the performance of ETH after the drop. There's a lot of buys and buying volume coming into the market. So you can see that here, you've got this massive buying frenzy that's happening, that happened at around $1,035. So this is incredible. It shows that the fundamentals are strong for Ethereum. That means a lot of buyers are entering. They see that it's a good opportunity to buy. That's why we've got here a massive wick. And following that wick, we have then a price recovery. So what I'd like you to see with this chart, so we're only looking at the 2-hour chart, so this is only short-term trend. But what I'd like you to see with this chart is that if we look at the previous low, which happened on the 11th of January, now we've actually got a higher low on the 22nd of January. So this is actually pretty bullish. And we've also got a higher high that happened on the 19th of January. So as you can see, we are actually moving in this channel upwards, and this is pretty good. So what that could actually indicate is that if we continue with this trend, we'll probably continue with this such a line and then end up at probably around 1,800, 1,900 in end of January. That would be my estimation. So I'm not sure if we're going to manage the $2,000 mark, but my estimation is still there. So if we look at the daily, I think this is very important to look at higher time frames to estimate the actual longer term trend. And the indicators that I'm using actually show that the current trend is really bullish, and you shouldn't actually trade against the trend. You should always trade with the trend unless you want to exit your complete position. I repeat that, you do not want to trade against the trend. So the indicator I like to use is the Ichimoku cloud. I talk about this indicator very often on my channel. It's one of my favorite indicators because it actually groups a bunch of indicators together and allows me to have a bit of a foresight on what is actually going to happen and tell me exactly what kind of trend we're in. So it's not actually predicting the future, but it's taking the past trend and actually pushing it forward so that I get a bit of insight on what the future could look like, but it's not a guarantee. Now with this Ichimoku cloud, the main thing that you have to know is we've got this thing here that's called the cloud, and as long as the price is above the cloud, the trend is bullish, and we're on the daily, and that means we're actually super bullish. Now when the price actually goes up in this exponential growth, what will often happen is that it will touch one of these two lines. These are like moving averages. It's basically an average of the price. So one is a faster moving one and one is a slower one. And these two lines act as a support. A support means that when the price touches those levels, the probability that the price bounces back and there's a recovery is really high. And that's why I'd like to see exactly at this price point here, the price actually recovered, and this candle here actually opened at $1,100. It dipped below the support at $1,095, actually went to $1,044, but the price and buying power was so strong it actually managed to push the price back up to $1,239. And this is very, very bullish in my opinion, since these lines here actually act as support, meaning that as long as the price is above these lines here, you can expect a continuation of the bullish trend. Do not try and short the market during a bull run. Just try and go long if you're into leverage trading. If you're not into leverage trading, just hold on to your saddle, as I'm pretty sure Ethereum is going to be a phenomenal investment in 2021. Now, of course, I'm not a financial advisor. Do not take this as financial advice. It's just my own opinion as someone that's been in the space for quite a long time. I remember the massive drop that we had in 2020 in March, where the price actually dropped from, I believe it was $200 or $300, and the price dropped to $90 for ETH and $4,000 for BTC. So you have to take these dips as a bit of a Black Friday or Cyber Monday kind of deal, and add to your position during the phases where the price actually starts touching one of these lines. And this is really easy to set up. I've also got a few videos which are available for free on my channel, so if you haven't already, do make sure to subscribe, as I bring out quite a lot of these videos helping you navigate the space and make better informed decisions. So you can actually get a tradingview.com account for free. I've got a few tutorials on my YouTube channel that show you how you can actually set up this Ichimoku cloud, and this will help you also alleviate some of the emotions that are involved with investing, especially if you're investing a substantial amount. Doji, do you recommend Coinbase? Yeah, Coinbase is pretty good. I have nothing against most popular exchanges, and also it depends basically where you're living. I don't personally use Coinbase because I live in Switzerland, and for me, using Bitpanda is more convenient. And with all of these exchanges, if you're using or if you want to invest a larger amount of money, I do recommend that you use the Pro version, so Coinbase Pro, because there, when you're buying and selling BTC or ETH or other cryptocurrencies, you're paying a much lower fee. I'm not sure how low it is. I believe it might be 0.1%. However, if you buy with just a normal Coinbase easy to use app, you'll be paying around 3%. So definitely use Coinbase Pro. You save massive amounts of fees, and it's pretty easy to use. Now, there's another thing that I'd like to share with you. But let's have a quick look at the ETH BTC. No, actually not the ETH BTC, the BTC USD price, because I think this is really important. I mentioned before, or at the beginning of the video, that we'll be trading sideways for a while. And that's, in my opinion, because we are actually between these two lines, the red line, which is at 29,145, and at 34,974. And if BTC trades during this channel, I think this is actually pretty good, not only for BTC, but for also the altcoin market. But for BTC, it's also pretty good because it allows the price to actually stay at a certain level and become a lot stronger. The support becomes a lot stronger. So it's like the new 10K. So if BTC manages to stay at a certain level for a long time, this is very bullish because it offers a great bouncing board for reaching new price levels. And I believe the next price levels for BTC is going to be probably around 49,000, 50,000 US dollars. So now I'd like to quickly share with you my profit taking strategy that works basically with any type of coin. However, it changes just a little bit depending on if it's a low cap coin or if it's a high cap coin like BTC or ETH. All right. So let's hide all of these things here because that's not necessary. And my profit taking strategy is super simple. Anyone can use it. And with this profit taking strategy, you're going to guarantee have profits at the end of this bull run. So now what I like to do when I buy a certain investment is I think about how much profit would I like to have. And of course you have to be realistic, right? I started buying BTC when it was really low, below 1,000 US dollars. I also started buying ETH before it was $100. And I told myself I'm going to set some price targets. And during these price targets, I'm going to take a small percentage off of my position. Now I'm not going to sell everything, because I always want to have skin in the game in case the price increases. But I also want to make sure that I can profit from certain swings. And at the end of the bull run, I've got a lot more capital than I initially invested. Now, if you're new to the cryptocurrency space and you haven't experienced the 2017 bull run, well, to cut it short, the experience that most people had there was that they entered probably somewhere around 15,000, 16,000, and everyone was super bullish and thinking the price would go up to 50,000, and people didn't really take any profits. And it's the same with people that actually entered in with $1,000 or $2,000. They rode all the way up and all the way down without taking any profits. Now, what I recommend that you do is you actually select different price points and only take out certain portion of your investment when the price is going up. Never sell during dips, always sell when the price is going up. And I think the reasoning behind that is extremely important. And that's because when you always sell when it's going up, you're actually selling because of a strategy. When you're selling because it's going down, you're probably selling because of emotions. And that's the worst way to actually trade and exit a position. So the thing is, when you're selling on the way up, you're actually selling at that point where your portfolio is the highest, and it makes it a lot easier to sell. If you sell after a dump, it's going to be really difficult. So if you've got a 10% dump and you try and sell then, you're going to think, yeah, but my portfolio was maybe 10 or 15% higher a day before. I can't really sell now. And then the price drops. So you've got this comparison between your previously unrealized gains and your current unrealized gains, and you realize, all right, you have a lot less money now than you had 2 days ago. And it makes it a lot harder to sell. And believe me, the emotions, the fear of losing all your money, but fear of losing out on possible gains is really, really powerful. It will actually make you lose a lot of money if you let your emotions control your investing. That's why what I recommend that you do, you take maybe half an hour, you look at every coin that you bought. If you buy a BTC, you write down BTC, you buy ETH, you write down ETH, and then you think about the next 5 years. And you put some realistic price targets on where you would like to sell maybe 5% of your portfolio, 10% of your portfolio, 20%. So for example, for BTC, maybe sell 5% at 100,000 US dollars and sell 5% at 150,000 US dollars. And these are just arbitrary numbers. And by selling on the way up, you're removing emotions completely off of the table, and you're actually going to be making the most possible profit, and probably the highest average selling price, because you're going to be selling all on the way up. And at some point you might actually sell at the complete top a certain part of your portfolio, because that is part of your strategy. Most people won't actually be able to do that because they've got too many emotions attached to the coins. They're married to their coins. But like Bob Lucas likes to say, you should be married to your portfolio, not certain assets in your portfolio. So yeah, that was basically a small crash course on how to make the best possible profit in the market, is by actually setting some price targets that you want to exit without too much thought behind it, and actually pull through and selling on those price targets when the price is going up and not when the price is going down. Basically, you want to be buying when the price is going down, and you want to be selling when the price is going up. That's the easiest way to profit, because you definitely don't want to have like 10x, 20x, 30x gains and then end the bull market with zero gains. That's really, really sad. I mean, sometimes people can have life-changing money in such a cryptocurrency bull run, and then they actually end up without even their initial investment. And that is, it's really sad. But I mean, the cryptocurrency market, it changes people. Money changes people. It makes you crazy. And I remember clearly the 2017 bull run. I did so many mistakes. Luckily, I didn't end up without any money, but I definitely lost out a lot of gains because I was fueled by greed. I was fueled by fear of missing out on potential gains. We were talking with friends about how 2018 was going to look like. We were like doing these price predictions, and in the end, we entered into the massive crypto winter, and the one thought that was super fun. Luckily, I didn't have any debt. And I actually had to sell a portion of my portfolio, so I wasn't in it too bad. But I know friends that got wrecked, especially since most people entered at the top. And I know that many people will be entering into the top because they only hear about cryptocurrency when it's going up, and not when it's like silently moving at the bottom. What do you think CME listing will affect ETH? I'm pretty happy about the CME listing. It had a massive bullish effect on Bitcoin. So this is going to be probably pretty bullish. However, it will also lead to a lot more speculation for the ETH price, which is good and bad. It will probably cause the ETH price to experience a little bit more volatility, similar to Bitcoin. But all in all, I'm pretty bullish about the CME ETH futures. Thanks, Perosi. Yeah, definitely hit the like, guys. Hopefully I'll be able to do these live streams a lot more. I've got one exam tomorrow, but yeah, I know everything that I need to know. And then I can make a lot more live streams. I'm also getting a lot better internet, so in case you're experiencing buffering issues, that will hopefully be resolved soon. Yeah, that's possible. First ETH rise, then huge dump of CME. It's possible the market might be manipulated a lot more. However, what I'd like to share with you, and I think this is really important, when you're actually thinking about investing, thinking about selling, you should always look at what the smart money is doing, because the smart money, it has actually a pretty good strategy in place when they think about acquiring a certain asset. So you always should look at what the smart money is doing. Is the smart money acquiring? Are they selling? Or something similar. So here from the sentiment platform, you can actually see that addresses that have 10,000 plus Ethereum at highest now are increasing in amount. That means that people, individuals, institutions that have a lot of ETH, the amount of addresses with more than 10,000 ETH has increased substantially. So it went for 1,211 addresses on Saturday, up to 1,225. That means people actually still think that Ethereum is undervalued. That's why the smart money is still accumulating at these prices. You shouldn't be worried too much at the moment with the current volatility, the drops and so on. You have to look at the long-term outlook. David Okimoto, Balancer and Kyber options. Are those ETH options, or what are there? I know a few DeFi apps allow you to buy some options. I'm not too familiar, or I haven't really used that many options. I'm just like barely familiar with the concept of options. I think it's interesting, but I'm not familiar to give a good opinion about it. So if we quickly talk about the FUD that happened yesterday, I got so many messages from people like saying, oh yeah, Bitcoin had a double spend attack, blah, 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 blah. And yeah, I think it's really important that when the price is dumping, you have to be aware that during that time, you're going to have a massive increase in FUD news, be that for the Bitcoin blockchain, be that for the ETH blockchain. Yeah, so you have to be aware of that. And to quickly shed the light behind this FUD, there was no double spend in Bitcoin. Double spend is not possible on the Bitcoin blockchain. The thing is, people actually misunderstand the way that the Bitcoin blockchain works, and they falsely attributed this double spend to something that happened on the Bitcoin blockchain. So basically what happened is that two transactions were put into blocks, but the reason that it's not a double spend is one block was actually called invalid by the Bitcoin blockchain, meaning that the spent amount only happened once. You can compare this with going to one hot dog vendor with your credit card. You buy a hot dog, you swipe your credit card, and before their machine actually says the payment was accepted, you quickly sprint to another hot dog vendor, and you also swipe your credit card there, and you buy two hot dogs, but you don't really have the money to pay for both of them. It's basically the same thing. The transaction didn't actually have any confirmation that was accepted, which shouldn't be something that people do with Bitcoin or ETH transactions. You should always wait for at least like 10 confirmations before you accept a transaction. So basically, there was no double spend, but a lot of people just pushed this agenda, didn't really understand the tech behind it, how the blockchain actually works, and yeah, pushed the FUD. Especially people that are maxis on one or the other side. You had the XRP maxis. I didn't see too many ETH maxis talk about that, but all in all, I think being a maxi is not great. You always should read in detail what the FUD article is about, because people, institutions are going to try and pull on your emotions, especially during a market correction. And this is really bad because a lot of people will take these articles at face value, and then they'll sell their coins, and they'll sell at the bottom of the dump, which is super unfortunate. So do not let whales and institutions manipulate you out of your hard-earned cryptos, and make sure you've got strong hands. Hostbeef, what's the use case for the Uniswap token? Is it just for governance? At the moment, it's just for governance. There's some speculation that it might have some fee earning capabilities at some point, but at the moment it's governance, and probably the price rise is due to the new Uniswap. I believe Uniswap version 3 that should roll out sometime in the next 2-3 months. Not too familiar when, or I haven't read any information about when it should be launched, but it's possibly speculation about that. And no one really knows what kind of utility it's going to have in the version 3. I'm pretty sure they've got quite a few surprises. That's why the price of Uniswap rose that much in the last 3-4 days. I think it's now at $7 or something like that. Talking again about institutions buying more crypto, you've got Microstrategy that purchased 314 Bitcoins for $10 million in cash, in accordance with the treasury, at an average price of $31,308 per Bitcoin. And if you look now, the current price for Bitcoin is $32,992. He definitely already made quite a bit of profit with his purchase, but he timed the bottom pretty well, or his analyst timed the bottom. Not sure if he's got any analysts. Anyway, this is just to close my narrative around following what smart money is doing, looking at not only the news articles that are coming around with institutions buying, but looking at the data that is proving that large whales are accumulating during these dumps, and that means that you shouldn't be selling during the dumps. You should follow the exit strategy like I talked about at the beginning, putting some price points and then exiting at those price points. All right, so here you should take his suggestion. It's early March 2020. ETH has collapsed to $90 and feels like the world is ending. 11 months later, and ETH is at $1,300, representing a 1,350% gain off the bottom. I think it's going to be really interesting to see what the price is of ETH at the end of the year. I believe it's probably going to be around $6,000 or $7,000 at least at the end of the year. That's my price prediction. My previous price prediction was $4,000, but I realized that it might have been too much on the lower end. I'm super bullish about everything DeFi, and yeah, the DeFi space at the moment is on fire, with a lot of value being brought to investors. So let me actually close up with my 10x DeFi gem that I'd like to share with you. But before I actually start sharing with you this DeFi gem, please be aware this is super risky. The project hasn't been released yet. It's completely speculative. Yeah, be ready to lose what you invest in it. Like with all the DeFi gens, they're always super risky, high upwards potential, but also high wrecked potential. So the DeFi gen I like to talk about is one I also talked about on my Twitter account. I posted about it a week ago, and the project is Whiteheart. And this is actually from the same developer from Hedgic. And it's going to be really interesting because it's about hedge contracts. You can buy call and put options for ETH and wrapped BTC, and the value of the white token is actually going to be massive, because people are going to be able to own these white tokens and earn 30% of the fees generated through these option contracts. And this is going to be fantastic. So the other thing that is pretty good is that the amount of white tokens is limited to 8,888 tokens, so a super low supply. The price is definitely pretty high at the moment, but I haven't seen a lot of people talk about it. Like I mentioned, it's still super risky, because the platform still isn't out there yet, so there's not a lot of speculation. But I like to compare this DeFi platform with Wi-Fi, Yearn Finance, and I'm pretty sure that whales are going to really love this. The reason for that is of course this 30% of fees that you can be earning by just holding and staking these white tokens. So I've got the white paper. It's a really short white paper. I think this portion of the white paper is interesting. So quickly, the core part of the hedging protocol is a new financial primitive called hedge contract. Hedge contract is a system of Ethereum smart contracts that can automatically conduct the process of hedging users' holdings market value. Basically, in other words, what this means is that if you buy ETH, you can buy such a contract to protect yourself against a price dump should ETH drop like 30% or 40%. So you're basically buying a type of insurance for your ETH or wrapped BTC position. I think it's really interesting if someone wants to go on holiday but doesn't really want to follow the charts, doesn't really want to sell, and he wants to buy a type of insurance because he bought a lot of ETH or bought a lot of BTC and he's not really sure about what the market's going to be doing. He can actually buy one of these options to hedge against a price drop. The great thing about this is that when you actually have to buy these insurance, you're going to have to pay a premium, and this premium is going to be distributed to the white holders. So white token provides its holders with a right to receive a share of fees generated by the protocol. The total supply is 8,888 white, so a really low amount of white. And I'm pretty bullish because I saw what happened to Yearn Finance. Yearn Finance only has 30,000 tokens. And here the initial distribution breakdown of fees is 30% of fees are distributed among white tokens that are staked, 30% of fees are distributed among Whiteheart liquidity providers, and 20% of fees are distributed among the hedging staking lots. So 10% go to wrapped BTC lots, 10% go to ETH, 20% of fees are distributed among hedging liquidity providers. So I can imagine some people, especially whales that want to earn some passive income really easily, are going to buy these white tokens in order to benefit from the fee distribution. That's why I'm super bullish about this project. But like I said, and I cannot stress this enough, super risky. Like with everything, I've never put like more than 0.5 or 1% of my portfolio in such projects. So yeah, so you just be aware of that. It's by Molly Wintermuth, an unknown dev, which created the Hedging platform. Hedging is a pretty awesome platform, so she or he's got a lot of clout because of that. So in my opinion, when the platform gets released in February, it's possible that this does a 10x at least. So yeah, that was it for this video. If you've got any questions, leave them in the chat. I'll gladly stay on a few more minutes and answer your questions. If you've got anything that's burning that you would like me to give some feedback about it. Let's see. If you're not already subscribed and you're watching, make sure to subscribe. Hit that bell button as you do not want to miss the videos that are coming up. I've got quite a few interesting videos, such as staking pools, how to earn passive income with crypto, and a lot more goodies. The last thing I'd like to talk about quickly before I close the stream, and that is the current price for the Whiteheart token, and it's the white token. It's currently at $3,106. I actually posted about that on Twitter, around $2,500. So make sure you follow me on Twitter to get the best and fastest news in your inbox. So there's, like I said, 8,888 tokens. Current market cap is 26 million. So the FDV is exactly the same. So pretty low, really high potential. And it definitely did pump a little bit, but it's not at its all-time high. The all-time high was a few days ago at 3,774. So yeah, it's not the all-time high. It's got a pretty good increase. People are accumulating. So yeah, that's about it. So yeah, glad you were watching the stream. Tokens that give you gas fees back, are they worth holding? I personally don't really use those. I mean, it's a good idea, but for me personally, it's not really worth it. I just try and time the gas fees and find the best possible time. I use a website called FeesWatch. Let me see if I can find it. So yeah, I don't really use any tokens to give me better gas fees. What I like to use to... Alright, let me rephrase this. This is my favorite way to save on gas fees. I use a website called fees.watch. And what allows you to do is you can actually see the BTC current price for a transaction, and you can see the ETH gas fees. And you can click on this little chart icon to see the historical price. And what I really love about this website is you can actually create alerts. So you can say, I would like to have an alert when the gas fee for ETH is maybe below 70, and now I get alert and I can maybe perform a certain transaction that I was wanting to do, like locking up a certain token. Me personally, that's my favorite way to do it, because if I just do it when everyone else is doing it, you're going to be paying massive amounts of fees. So trading when there's a dump or when something great is happening, like a 1h exchange drop, the gas fees are going to be terribly high. So that's one of the other reasons why it's better to sell when the price is going up, because you're probably going to have lower gas fees. So yeah, that was it for this video. Hope you enjoyed it. I'll catch you in the next one. Have a great weekend, and yeah, see you soon.